Mastek is the company that we are focused on. It posted a weak performance in the third quarter, a decline in revenues and margins. Let's now speak with the newly appointed CEO of the company, Umang Nahata, who's with us to take some questions. Umang, good morning. Great to have you with us here. Thank you for joining us this morning. Prashant this side. And congratulations on the appointment and all the best right at the outset. Now, of course, we had to talk quarter say quarter, Umang, you understand. So let me just start there before we talk about the slightly longer timeline here. The quarter has been slightly slower for you. Other than furloughs and seasonality, did you face any other headwinds?
No, I think that furlough is the most important challenge of the quarter. It is usually a weak quarter for us, given the nature of our business. I think we had a little more than expected furlough, more than anticipated. And we're pretty close to staying flattish. In fact, we are almost flattish in constant currency terms. So it is furlough and some currency that has put us down in terms of slightly down both on top line and bottom line. But yeah, those I would call out as the key, but expected kind of challenges, nothing unpredictable here.
Okay. Now, for the 9-month Umang, dollar revenue growth is about 10.6% or so. What can we expect for the full year? And if you can tell us, will FY26 be meaningfully better? Some sense.
Yeah, I think we are expecting Q4 to have better growth than I think we had. Like I said, Q3 was a furlough quarter, and staying flat in a furlough quarter is gives us a good outlook going forward. Having said that, we are still not fully, our US business is a little, up and down. It has a lot more project business still. And we will take, I would say, at least 2 or 3 more quarters as we grow our, business into more, T&M or managed services profile. So we think Q4 is going to be positive from here, but in the midterm, there's still a degree of unpredictability as we stabilize our US business. As far as FY26 is concerned, we feel we will definitely do better in terms of overall growth profile from here. Our expectations are higher, but not like extremely high, but moderately better than what we have been doing this year. Our focus also is pretty significantly to improve our operating margins in the next year. So we will be pretty focused on, stabilizing the business and improving the operating margins. Starting H2 is when we really go back and push out for growth in the North America.
All right. Hi, Umang. Good morning and good to see you in. Nigel on this side. Umang, so you're telling us that FY26, you're optimistic it'll be better than FY25. Is that correct?
That is correct. That is correct.
Okay. Let's focus on margins. For this quarter, there was some impact, I think, of wage hike. If you could tell us, if you could quantify that, because it's still sub that 16.5%. And a couple of brokerage notes are suggesting that the exit margins for quarter 4 could be in the vicinity of around 17% and build on from there on. Give us the targeted number, impact of wage hikes in the past quarter, and what's the outlook from here on?
So wage hikes around 160 basis points, approximately, give or take, would be the impact of wage hike in this quarter. Going forward, while operating margins should improve, but our UK business actually is seeing a lot of growth, and the growth does come at some degree of cost. So we're trying to balance the cost that we have to put on growth versus the growth outlook that the business overall has. So yeah, I mean, we should definitely do better from here, but I mean, the estimates that you have is close to where we are expecting us to be.
So ending this year close to around 17%, and in the next couple of years you head to around at least 100 basis points improvement. Would that be something that you aspire for?
Absolutely. I mean, our aspirations is in the next 2 years take us at least 200 basis point higher than where we are. That 19% would be a good number to run our business at.
Okay. All right. Also, you're sitting on cash of close to around 500 crores.
Yes.
Is there some inorganic growth on your mind?
I think we have done quite a few inorganics in the last 6 to 8 quarters. Our current goal is to really go out and stabilize the inorganics that we have acquired for. So we are pretty looking at integrating the assets well, trying to really grow our data and our Salesforce business that we have acquired. Having said that, we are looking at investing in our UK Europe geography, but there will be more tuck-in kind of acquisitions rather than a strategic change. We would go out and again look at more strategic acquisitions maybe after 12 or 1.5 years maybe.
Okay, very quickly before we let you go, your press release says that the US business delivered good growth with improvement in profitability as well. Have margins hit double digits out there?
Yeah, so that's actually a good sign. So that's one of the areas that we really wanted to US to continue to deliver growth, but at double digit or mid-teen kind of margin. So we're there yet. I'm sure there are still a couple of 100 basis points that we can improve, but yeah, the US, this is the stable rate. We want US to deliver steady growth, but at a steady margin of mid-teens.
Okay, a hint of optimism out there. Umang, thanks a lot for joining in. Looking forward to chatting up with you, and we'll hold you to all these numbers that you've given us as well.
Problem.
Well,